Hello and welcome to today's thorough video, which is called Huge Squeeze. So let's dive into whether I see that unfolding in equities, precious metals, oil, or what have you. We will dive together into the charts. You know already what I do on my site. Thank you for liking this video and subscribing to the channel. Your likes help greatly, so thanks again. And let's dive into the charts, starting with yields. You remember that in the extensive Saturday video I had been forecasting that yields are not going to cause trouble for equities through their ascent during this week, this FOMC week. And while there had been an attempt for yields to rise thanks to Fed dropping the inflation reference, being content about how it's progressing, this fight on inflation, we had seen that ascent in yields being rejected, and I expect yields to continue slowly drifting lower, which is very positive news for the equity risk premium. Less competition for equities, so let's dive into what it means for real assets and what is the perspective that trading signals clients are getting. You see as well the risk on turn kind of continuing, even though there was a setback yesterday and junk corporate bonds had to recover from some very tame selling pressure. So this tells you as much as it can about where equities want to ultimately go and which way the wind is blowing. Coming to gold, silver and miners, we had seen them all rise in tandem, and you remember my clear call not to be afraid about Monday's slide, which was more or less a matter of liquidity, fears and some very cautious positioning while the DeepSeek news had been digested, and picking individual winners within communications, within the retail space such as Amazon, and within tech such as Apple. I will be linking as well to the videos throughout this week that had been dealing with this subject precisely, so that you can review them. So do treat yourself to the development of how markets have been assessing the business impact and which companies had been rewarded, which companies had been punished and why. So today, of course, we have GDP ahead. Do I expect it to come in hot? Not really. Fourth quarter will be tame, below expectations, which will be good for bond yields. These will continue slowly retreating, and this is very positive for real assets, gold, silver and miners. Unlike, of course, oil. Premium clients, trading signals clients know exactly why I was calling for oil not to surpass in its retracement the 74 to 75 area, and we saw it turn comfortably lower because the path of least resistance for oil prices is to decline, and they will continue declining. Only the pace is the variable, and I will be of course keeping them updated because this service is accompanied by its own Telegram channel, premium one. A couple of tweet highlights. This is the video that I had been talking about, where I was diving into which companies are going to be winning on the DeepSeek game changer and what this game changer is actually all about. So that's an invitation to review this. and link to yesterday's video. Just visit them as you finish watching this one, because we had not yet come into equities. This is about my continued bullish positioning following the Fed bullish calls when it comes to equities, and that I expected those three key earnings after the close yesterday to mostly help the stock market to go higher. But we had the bull trap before that. It played out, shook off weak hands, weak longs, and stocks can now continue grinding higher. A couple of words about the Fed. It's setting up for a replay of spring 2019, which pitted Powell against Trump, and these are a couple of interesting FOMC sessions ahead. For now, yields are following rather the not Fed projected path, not higher for longer. Market yields are dropping for a couple of good reasons. And you know, of course, that this has been my position already last week, that this is going to be happening, and it actually came to fruition very fast yesterday. And finally, S&P 500. You see, breadth is nicely primed to improve. We had selling rejection on the FOMC. The decline had been rejected, retraced higher. After earnings followed up. Now pre-market consolidation, and the utilities oddity kind of rectified itself, as you can see from this sectoral overview. This was Tuesday. What I was highlighting was the issue, and now you see, while tech had been under pressure, utilities had gotten its act together, because electricity will be always needed for one thing or another. It's about appreciation that big AI needs high quality chips. Final slide is about discretionaries. You know already, of course, how Starbucks had been drifting and squeezing higher. This is not the chart of the stock market or the economy heading into recession. Consumer strength is being misjudged. The consumer is actually stronger than it is, and the same picture is conveyed by financials. Yesterday we had not seen a reversal in financials, just a daily consolidation, while communications, driven by the winners from the DeepSeek, are drifting higher. Once again, Happy New Year of the Snake. It's wood, intuition, strength, wisdom, renewal. My join page to help you select what's right, so do treat yourself. New month is starting, and we do a lot of interesting stuff as regards cryptos with Helene on the intraday channel, but you have as well real assets and comprehensive views to understand what is happening on a daily basis, not just the pre-market or intraday updates. What's going on about the quick market turns, my trading story, obligatory disclaimer, and let's talk later.